Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
All right, 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, and Taylor Riggs counting you down to the close. And here to help take us beyond the bell with our global simulcast joining right now, Carol Massar, Tim Stenovec, bringing together our Bloomberg Television, Bloomberg Radio, and our YouTube audiences worldwide to parse through all the moments of the day. And it is a record high day once again, guys.
God, we made it Friday. And look at it, a record day. I mean, here we are up, another weekly gain, 4 in a row for the S&P and the Dow. The NASDAQ on another weekly gain for 3 in a row. But record numbers again, Taylor. Investors continuing to seek yield, and they're finding it in equities.
Oh, seeking yield. They're also finding that within the bond markets, Carol. It was interesting. We were showing a 5-day chart earlier of the 10-year yield and peaked at a 170, Tim, on Tuesday. We had some crazy price action yesterday. Bonds really catching a bid, and then you steady out somewhere between a 155, a 177, really range bound, and you wonder if that does mean the sweet spot for the equity markets.
Yeah, look, it seems like for investors, there is a lot to love out there. We got a slew of really good economic data this week, whether we're talking retail sales, weekly jobless claims, housing starts, a lot of good stuff that investors are happy about. Plus, all the banks have reported earnings, and looking forward, they're pretty optimistic.
And global data, guys. I mean, it wasn't just the US that's on fire. China, I mean, it lived up to expectations. But when you see a number like 18%? What? That seems crazy. But clearly, we're seeing the economic firing on all cylinders around the world. And that's why we've got a global record high as well in terms of your global stocks, Romaine.
Yeah, and I'm glad you bring the global back into this because, I mean, when you talk about the sustainability of these rallies here in the U.S., you really do need global participation to sort of get this to the next leg here as we get the closing bells right here in New York City here. The Dow Jones Industrial Average looking like it's going to end the day higher, 34,194. That is up 4 to 0.5%. The NASDAQ Composite up fractionally on the day, 14,048. The S&P 500, 4185. Record high, up 3 to 0.4% here as we await the final few settlements here on the day.
You know, Romaine, and of note, we are finishing just off our highs of the session here on this Friday. 1.2% higher for the Dow on the week overall, 1.4% higher on the S&P 500, and the NASDAQ a gain of 1%. The question in here, Taylor, is whether these equity gains continue or do investors try to start to find some other options or start to get a little bit of a pullback and take some money off the table.
On a sector level, certainly was a cyclical trade on the day. In the week, the story was very similar. Materials are up 1.2% on the day. Utilities up 1%. This is the exact story that you see as the big outperformers on the week as well. We migrate downwards, and this is interesting. Technology is on the bottom, even though yields are a little bit lower in the last few days. In energy, we're off about 0.9% on the day on a sector level. Even though energy crude was higher, energy stocks are lower. Still trying to figure out, Carol, what this all means and digest the news.
All right, well, maybe we can get some clues from some of the movers today and some of the gainers specifically. Moderna up almost 7% in today's session. The headline, cutting COVID vaccine supply forecast to the UK and Canada. They're worried about that European supply chain. Remember, though, earlier in the week that they're going to be talking with another pharma company, Nexus Pharma, about producing their vaccine that came from Reuters. So that stock higher. Also higher, a specialty chemical company, PPG Industries, up more than 9%. Upbeat earnings from that one. And then you also heard from D.R. Horton in the housing sector, up about 4%. Once again, they got a new call out from Wells Fargo, specifically new overweight, price target of 105, so some upside there. And one last one, Coinbase. Got to talk about Coinbase. It's up about 36% this week. It was higher in each 3 days, those first 3 days of trading, but it is below what it opened at, Tim.
Yeah, let's talk about some notable decliners here. As we mentioned, the big banks finishing up earnings this week. Morgan Stanley surprising investors with that $911 million loss tied to the collapse of Archegos. That's a lot of money, and it came as a surprise. It kind of put a shadow on a really good quarter from the bank. We had investment banking fees beat, fixed income trading revenue rising by 44%, beating estimates. But still, investors not too happy with that loss from Archegos. Let's talk Boeing, though. We are seeing Boeing down more than a percentage point. More bad news for the 737 MAX. Inspections finding more electrical problems. Reuters reporting that repairs are expected to take a few days per plane. Pinterest also down nearly 10% on the day. Shares falling as much as 11%. That's the most in 6 weeks. Still, a Bernstein analyst saying that it is a buying opportunity.
And let's go cross asset now for our radio and TV audiences, because it's been a phenomenal week when you're looking across the asset classes, not just stocks, but also bonds. But I take you to the world of foreign currencies right now. Dollar, this is the worst week for the US dollar all year. And therefore, we're seeing on the day the Great British Pound off by 0.4%, the Swiss franc getting a bid up by 0.3%, a story of dollar weakness. That feeds in, of course, to where commodities are playing, because we've seen that gas up. We've actually seen the best week for copper in a couple of months. You've seen oil had its best week as well since about mid-March. But on the day, actually, a little bit of weakness in copper, in oil, as we rethink some of those highs. But I leave you with what's happening in terms of sovereign bonds. Actually, a bit of a movement away from the bonds across in Europe. We had movement into the risk assets in Europe. We had Europe really on fire. We had, of course, a global risk on trade, and that's meant money saw yields push Germany up about 3 basis points on the 10-year. Similar moves for the French 10-year as well, Taylor.
And you saw that in the U.S. I believe we had a 30-year bond auction this week. That's how long of a week it's been, that it feels like ages ago. And this is the first back-to-back bond price higher, yield lower that we've seen in all of 2021. You see that in the 10-year yield as we migrate down from a 167 to a 159 on the week. You're down 7 basis points. And the 30-year, we also migrate down from a 233 to a 227, Romaine.
We were at 172 just 2 weeks ago, and you were telling me the sky was falling.
Blink and you miss it.
Can I just say,
ready to change up, ready to change down.
The most read story on the Bloomberg in the past week, stocks, bonds rise with inflation concern fleeting. Nobody seems to care about inflation. Taylor, I'm just going to put that out there.
And it is the strong economic data that we got this week, Carol, where you think about the strength of the economic data, and yet Treasury seem to ignore some of that positivity.
Well, I should point out, Richard McGuire over at Rabobank really made a great point on Bloomberg Television earlier. He really put this eloquently. Right now, the reaction function in the Treasury market really isn't on the economic data. It's on, as you would say, Taylor, the second order effects, which, of course, is what Jay Powell and the other gang down there at the Eccles building is going to do in relation to that economic data.
Yeah, whether the reaction function is how we respond, how much we can allow this economy to run hot. Talking of hot economies, I mean, China was where it was at. And indeed, maybe the bond story is one of a foreign story, whether we are getting Chinese buying, whether we are getting Japanese buying, all important on today, of course, where we've got the Prime Minister of Japan meeting with the President of the United States at the moment, Tim.
Maybe the UK could get involved in this.
I mean, it all comes back to the UK, guys, at the end of the day.
Wait a minute.
Hey, look, a lot of positive economic data, as we mentioned. And speaking of that, housing starts coming in really hot today. And it just shows that demand is so high right now and supply is still not there, but it is starting to catch up. The best number that we've seen in years.
You know, Caroline, I'm going to punt this to you. I'm not a mom. You and Carol are some of the best moms I know. But this is a sadder story as we think about...
I don't know that my teenager feels that way, but okay.
Re-entering the job market, but moms have really been stuck on the sidelines. Caroline, is this a child care issue? What is going on?
And actually, it's interesting that the US government is now trying to look towards caring as an issue that is a blocker within a return to the workforce. But this is something we talk about so much on the show, the unequal recovery, the fact that people are still being left behind. First and foremost, it is women, it is people of color, it is, of course, minorities that are being not within, of course, the stellar jobs numbers that we've seen this week. There are still 8 million people unemployed, Carol.
Well, listen, Caroline, you know this too. Like, when you think about economic impact, the more that we've got that are being productive workers within the workforce have the opportunities. We're talking about 2 million fewer women in the workforce than were pre-COVID. And when we're talking about economic recoveries, we're talking about economic momentum. We need women involved. We need people of all races involved as well. And, you know, it's not just something we're interested in or CEOs. The Federal Reserve over in San Francisco and other Fed members, they are definitely interested in it as well, Romaine.
Yeah, and that's when we talk about the Fed and its reaction function there. Of course, a lot of that has to do with sort of how they view the labor market. Of course, they've been talking a lot about that labor market and full employment within the context of sort of the racial disparities, but the gender disparities, certainly something that Powell himself has also pointed out. He actually pointed out earlier in that interview with Rubenstein midweek that we had.
All right, for those of you watching on Bloomberg TV, listening on Bloomberg Radio, our Beyond the Bell simulcast, one thing I want to point out for everybody, one of the most read stories on the Bloomberg today was an exclusive by Spencer Soper on Amazon. Now they're going to assemble our furniture for us, guys.
Wayfair gives me just what I need.
Does that mean, Tim, you're not going to buy from Amazon, have them put together your bed?
I'm not ready to have random people come in my home quite yet. But look, this is the thing that drivers are not too happy about. As Spencer reports, they are a little concerned. Yeah, it is a game changer for Amazon, but those drivers are a little concerned about what it means for them because they got to learn how to assemble all of this stuff.
I mean, half the time they come to deliver a package, they just ring the bell and run away.
They just want to be everywhere. All right, that does it for our cross-platform coverage on Bloomberg Radio, Bloomberg TV, and on YouTube.
Happy Friday.
We'll see you back Monday, same place, same time. Happy Friday indeed.